Okay, guys, welcome. It's a big one. We just got US GDP, and it's confirmed we're in a recession. So everything was kind of built up last night after the Fed turned all bullish. They did raise rates, obviously 75 basis points, but they kind of said they were going to adopt a wait and see. So the market took that to mean that maybe rates weren't going to rise as much as previously. So over here we have the Fed funds for December. Already you can see it's moved. It was pricing in a rate of over 4% for December 2022. Now it's down to under 375. So obviously risk assets like that, equities all rallied, etc. Facebook then came out after the market along with Qualcomm, which weren't great. So everything now is pretty much on hold until Apple and Amazon tonight. So those are the big ones. We need to get over that hurdle if we want to rally. We're probably still looking at a rally just based on positioning. Fund managers are still very underweight equities. Hedge funds are very underweight equities. So this rally could continue, but we need Apple and Amazon probably not to be as bad maybe as feared. Fixed income, as I mentioned, so yields are all gone lower, which means risk assets are higher. Bitcoin is higher. Oil is kind of stable. It's trying to work out what's going on with a US recession and a global recession versus the dovish Fed. So oil is kind of still unchanged. It's sitting below just $100. Gas in Europe is still high. There's still all the talk of the Nord Stream pipeline over there. So that's going to drag on and on. In currency land, the dollar went a little bit weaker after the Fed turned all dovish. Obviously, that's probably going to be added to because of US being in a recession. So it's a bit of a double whammy for the dollar. Yields going down, economy going down. The only caveat is dollar against euro. Which would you favor? The euro isn't exactly moving with flying colors at the minute. And we did get some hawkish comments overnight from one of the Japanese central bankers who said wage growth is going to surpass inflation. So dollar yen has been a serious outperformer, moving higher and higher relentlessly. So that might come back if those kind of some way hawkish thoughts could be taken to mean that the Bank of Japan might eventually abandon its yield peg. But overall, equities are still performing relatively well. Futures dipped down just on the US GDP release, but they've gone back probably slightly higher than where they were now. Their futures are indicating more or less flat in the open. Europe didn't do a whole lot. We had earnings, Black & Decker, which weren't great, and Best Buy, which also weren't great. So retail is still beginning to struggle. Inflation is really hitting consumer spending. But then you have some other, Ford was pretty strong. Facebook and Qualcomm, as I said last night, weren't great. So it's all set up really for Apple and Amazon after the close. Best of luck.